Hi everyone and welcome back to my final morning report chart appraisal on Monday the 8th of February with me, Rich Payne, market analyst at Antec Markets. Let's look at gold, and well, this gold chart continues to run higher, doesn't it? Really strong move that we saw on Friday, actually meaning that was 6 bull candles in a row. Really strong move over the last week, up from below 1120. It started on Monday last week, 1117.50, closed on Friday 1173. So yeah, it's really strong gains across the week last week. Are we still running this one higher? Yes, I think you are for the near term. I think you've got to just stay mindful of the potential correction that you could see coming through. But certainly the Friday's reaction was incredible. Actually, you've got this strong momentum on this RSI. 77 on the RSI. When was the last time we saw that on gold? Crikey. Wow. 2012, the last time we saw the RSI up at this level on the momentum. So really strong momentum gaining on this ground. But you would argue, therefore, you're pretty much sort of beginning to run out of upside potential, maybe in this chart. Now let's just have a look. We get the Bollingers. Have a look at the Bollinger Bands. Now that would suggest you're trading sort of upside or almost outside the upper Bollinger Band. Now that would obviously suggest very strong momentum, but also sort of on the brink of becoming really quite stretched. And I think that it sort of ties in with my sort of outlook that it's beginning to get a little bit of overstretched. This, although momentum is very strong, you would argue also that you've broken out from this uptrend channel, and you could do a near-term sort of breakout level. You sort of measure the channel height. I mean, it's pretty crude, but then you project it higher. You're sort of looking out for, again, a retest of those highs, really, aren't you? Those old October highs. It certainly seems as though you're looking out for that. So that's 1182.50 is your next target level. That's not too far higher from where we are now, is it? And it's basically $10 higher from where we are. Now, today's open. Now, interesting that we've seen on the last 4 days, we've seen the market opening, dropping, but then recovering strongly into the close. Again, we saw $10 down on the day before you've seen the turnaround. Was it $10? $7 down on the day before you saw a turnaround. So really interesting that that's happening every day before a strong run higher. So I think that it looks like we probably are going to test these 1182, maybe 1190 resistance level from those October highs. But again, just be careful, because you've got possibility of probably $10 of upside, but look at how much you could unwind to the downside if you have it. So just bear that in mind. You have strong momentum at the moment, but you need to be mindful that you could give back quite a lot as well. You'd be looking out for your hourly momentum signals turning around probably. Again, I said on Friday, look for the hourly RSI. If it starts to drop below 40, then maybe that's the signal. It hit 40 and rallied. You see the MACD lines, there's a very slight bear, sort of negative divergence, but at the moment you're not really sort of playing that one out. You'd argue that the overnight support that came in around 1163 is probably the level at which you're starting to think about. If you start to lose that now, maybe you'd start to see the turnaround. There is a further small support around 1161, but the main support obviously is that reaction low for Friday, which was the post payrolls low, and that was at 1145. And again, 1145 is a bit of a breakout level. Old highs becoming new support and new support. So 1145 is a key level now near term, but certainly that this is beginning to look a little bit stretched. You might eke out a few more gains, but I don't think you're going to see too much further to the upside before you start to see a correction coming through. So I wish you good luck in your trading on gold today, and I'll speak to you tomorrow. Thank you.